Colleagues.
Dear colleagues, thank you very much. Good afternoon. We are starting the press conference by the Governor of the Bank of Russia, Elvira Nabiullina. We will have first hear the statement following the Board of Directors meeting. Good afternoon. Today, the Bank of Russia has decided to cut its key rate to 7.5% per annum. We also revised our end 2019 inflation forecast downwards by half a percentage point to 4.2 to 4.7%. Should our baseline forecast materialize, we hold open the possibility of a further rate cut at one of the upcoming board meetings. We assume that we may shift to neutral monetary policy before mid-2020. I will now highlight the factors we considered while making today's decision. First, there is a stable trend towards inflation slowdown. It is attributed to the Bank of Russia's key rate decisions, including the preemptive hike in the second half of last year. We passed the inflation peak of 5.3%, slightly lower than we expected, in March. Inflation slowing down from this lower peak is overall in line with our forecast. In the February-May period, prices rose by approximately 0.3 to 0.4% a month, seasonally adjusted. That means that the monthly growth pace has returned to the lowest readings since last August and stands near 4% in annual terms. Annual inflation fell to 5.1% in May and came in at 5% precisely as at the beginning of this week. This dynamic is attributed to the following factors. The effect of the VAT increase on inflation has run its course. The ruble's strengthening since the beginning of the year made an additional contribution to inflation slowdown. Higher oil prices and overall favorable conditions in financial markets helped. International investors' interest in Russian assets recovered, which was the most distinctive in the overseas market. The agreements on retail fuel prices between the Russian government and oil majors are continuing to play a significant role. Consumer petrol prices rose in May by 2.8% year-on-year, and their growth is likely to be moderate in the near future. That said, the new regulation in this market, in particular, the offsetting mechanisms, including reverse excise duties, is rather complicated. Currently, it is hard to accurately estimate its medium-term economic effectiveness, especially for scenarios providing for tangible oil price fluctuations. Moderate domestic demand is also curbing inflation. This calls for a deeper insight into the economy. This is the second most important factor that we took into account. Economic growth in the first half of the year has been lower than expected. We predicted that business activity might slow down somewhat at the beginning of the year on the back of the following factors: the VAT hike, a likely slowdown in growth of the global economy and demand for Russian goods and services, and the implementation period of the major national projects scheduled for the second half of the year. Some of these factors had a stronger effect than expected, in particular budget expenditure dynamics. We will be able to take a deeper insight into the economic growth slowdown after detailed GDP statistics are released. However, the 2018 data released in April and preliminary Q1 2019 estimates allow us to update our GDP forecast for this year. In particular, the revision is associated with lower export growth rates and a tempered outlook for growth in the global economy and external demand. We have left the forecast for consumer and investment demand unchanged in view of the expected rise in public expenses in the second half of the year. As a result, we have updated the 2019 economic growth forecast from 1.2 to 1.7% to 1.5%. Third, pro-inflationary risks have declined over a one-year horizon. First, we no longer expect any deferred effects of the VAT hike. Second, the US Fed consistently eased its rhetoric since the year's start amid the expected slowdown of the global economic growth. All else being equal, this constrains the risks of considerable capital outflow from emerging markets. In March-April, we noticed that the risks of accelerated growth in prices of certain food products diminished overall. They remain moderate, though current food inflation was somewhat higher in May than in the previous 3 months, seasonally adjusted. Moving forward, we expect that record crop areas, early spring, and overall favorable, in the meantime, weather will bring a good harvest of vegetables, grains, and other crops. Domestic and global grain prices have been down since the beginning of this year. This constrains pro-inflationary risks for food products. As regards monthly growth in prices of non-food goods and services, it held close to or below 4% in annual terms in March-May. Fourth, we factored in that inflation expectations of households and businesses remain elevated against both the inflation target and the minimum levels reached in the opening months of 2018. Inflation expectations show mixed dynamics. Business price expectations continued to decline in April-May. Inflation expectations of households came in at 9.3 to 9.4% during this period. However, we expect that inflation decline to 4% will bring down inflation expectations of households and businesses. Analysts' expectations remain anchored at the inflation target of close to 4%. Fifth, monetary conditions are softening. This is driven by changing expectations of domestic and external financial market players. First, this is enabled by revised expectations as to the path of the Bank of Russia key rate. Second, by an adjustment in expectations in yields in the external financial market against the background of changes in major central banks' rhetoric, which I have mentioned already. OZ yields are declining in this environment, enabling a potential reduction in deposit and lending rates. Between April and May, a number of major banks revised downwards their interest rates on several deposit products. Interest rates on mortgage loans were also beginning to trend down. Today's decision to cut the key rate, alongside the signal we have sent out, will work to solidify these trends. Now, medium-term outlook. The outcome of OPEC Plus negotiations remains uncertain. We look to further concerted actions by the deal parties to warrant smooth oil price dynamics over the forecast horizon. Based on their actual movements since the year's start, we have upgraded the average annual Urals crude price in our baseline scenario from $60 to $65 per barrel in 2019 and from $55 to $60 per barrel in 2020. We retain our conservative assumptions for 2021, whereby the oil price is expected to reach $55 per barrel. Key balance of payments figures in the baseline scenario have also been adjusted to oil price movements and the expected dynamics of the global economy. This year's current account balance is estimated to total $98 billion, which is approximately 6% of the GDP, and drop subsequently to $50 billion, which is approximately 3% of the GDP in 2021. This is attributed to downward oil price trends and expanding imports as economic growth accelerates. The private sector's financial account balance in 2019 is set to amount to approximately $50 billion, which is also 3% of GDP. Financial transactions of private sector balance already reached $35 billion in the first 5 months of the year. We expect it to drop substantially in the second half of the year compared to both the past year's last 6 months as the first 6 months of this year. The main reasons behind this outlook are as follows. First, it comes as a reflection of the seasonality, which is typical of balance of payments figures. Second, we look to normalization in the accumulation of foreign assets, which has quickened considerably since the middle of the past year in the context of strengthened external, including geopolitical risks. Our medium-term economic growth outlook is essentially the same. 1 to 1.5% GDP growth in the current year is expected to accelerate gradually to 2.2 to 3% in 2021. Having said that, our forecast will largely depend on the timeframes and successful implementation of the national projects, along with other fiscal policy decisions. Discussions are currently underway about possible options of spending the liquid part of the National Wealth Fund in excess of the 7% of the GDP cap. As we look into such options, it is imperative that we remember the key objective of the fiscal rule, which is to reduce the reliance of the economy, of the real exchange rate, and of public finances on a volatile energy price environment so that they all become stabilized in a state equivalent to the oil price cutoff. We have largely delivered on this objective, with the impact of oil price fluctuations on the Russian economy having considerably weakened. Current suggestions are essentially focused on changes to the rule. They could result in either direct or indirect change in the cut-off price, entailing a strengthening of the real ruble exchange rate and undermining competitiveness of our products. Alternatively, the stabilizing mechanism of the fiscal rule could be undermined, yet again adding to the vulnerability of the Russian economy to fluctuations in external environment. More so, the 7% of the GDP cap was set a long time ago, yet another review is needed to establish whether this volume of liquid assets is adequate to resist to sharp and lengthy change in external conditions. As we review these and similar suggestions, we urge to fully consider the benefit and loss balance driven by change in macroeconomic conditions which may be tangible enough. Approaches to fiscal and structural politics will have a significant impact on both our forecast and estimates of the balance of risks for inflation. This will, in turn, determine the monetary policy path. Thank you. Thank you. Dear colleagues, now we will switch to your questions. Please introduce yourselves and identify your agency. Gulia, please. Gulnara, Hitvaria, Novosti, Elvira, thank you very much. That was the signal that was sent out in your press release, to the extent that it is considered the possibility of closing in terms of the rates and considering at your next board meeting, and what will be the outcome of that until 2020. Because previously you explained that within the next immediate meetings would mean that it was at one of the three meetings. And so the neutral rate, which is 7.5%, is going to be retained. Yes, we basically keep our approach to one of the next few meetings, or one of the three meetings, and we also retain 6 to 7%, which is the neutral key rate range. Dear colleagues, Mikhail, please. Mikhail Sedin, this room. With respect to the updated midterm macroeconomic outlook in 2021, it is expected that the household expenditures will accelerate by about 2.5 times, 3 times. Could you specify, compared to the 2019 dynamics, could you specify on the basis of which one is expecting such a serious acceleration in the base scenario? The end consumption spending by households, not 2 to 3 times, because they're growing by about 2.53%. From 1 to 1.5%, so basically you're talking about the growth rate. This is expected due to a certain expected real income growth amongst the households. Now, in as far as the consumer lending activity is concerned, we have slightly updated and upgraded our forecast from 10 to 12 to 15%, and for 2021, we retain our forecast unchanged at the level of 10 to 15%. So the basic factor is expected growth of incomes. This year, we also believe that consumption, to a certain extent, was deterred by the VAT hike. Margarita, please. Thank you very much. tax agency. Elvira Nabiullina, could you please tell us, recently the level of reserves reached $500 billion with the very same comfortable level. So how the accumulation to that particular fund will be happening in the future? Will something change about it? And my second question, what is the reason behind such an expected outflow of capital for 2019, which is in as far as the gold in hard currency reserves are concerned, let me remind you again that that wasn't the target as is being considered. That was our assumption of a desirable level, which provides us with a greater comfort in terms of the safety cushion. We have indeed reached the figure of $500 billion, but let me remind you that we began talking about $500 million when we didn't have any fiscal rule in place. Right now, basically, such accumulations take place as part of the fiscal rule, which is what we're going to continue. So any special reviews or any special target setting, we're not expecting to do that. Now, as far as the greater expectation of the current account from 35 to 50 billion is expected, I've mentioned it already that we are looking at the past 4 months that we've reached $35 billion. That was attributed to higher oil prices, which and the accelerated accumulation of the foreign assets, amongst other things. And so we believe that this particular factor, the foreign asset accumulation, will cease to be effective. So in the remainder of the year, overall, the financial current account will be growing at a slower pace, but nevertheless, it will grow until the end of the year by additional 15 billion. And so this is the main specification. Colleagues, please, Anastasia. Interfax Agency. Do you allow for a faster inflation pace during the summer month against the background of the food product prices growing? And do you allow for an October price deflations, relying upon the Minister of Economic Development forecast that the start of the inflation by the beginning of 2021 will be below 3.5%? As far as to the way the inflation behaves in the summer months, well, we do have a very much eloquent seasonality, and so we do not rule out that the inflation may materialize in the summer months or in October. Now, and as far as the utility tariffs are concerned, because this year the increase of these tariffs have been split into 2 stages, and the main hike occurred in January. The next hike in July is going to be lower, 2.7% annualized, because this would produce a certain disinflationary effect during the period. As to the food products and vegetables, we also expect some good yield. A lot will depend upon the weather conditions, of course. As to the inflation forecast until the end of the year, like I said, we updated it, we lowered it, and in our mind this is 4.2 for 4.7. And as to why the current monthly, not seasonally adjusted level of inflation is at about 4%. And so the margin above 4% inflation as a result of the VAT hike and other factors is 0.4%. And respectively, if the level of the inflationary pressure remains around our target, is going to be about 4.2, 4.7. Now, if there are any powerful one-off disinflationary effects, then quite possibly inflation may turn out to be lower. But in the meantime, we do not see strong probability of it, so we will monitor the incoming data dynamics, and during the next board meetings, we will assess the inflation again. Andrei, please. Could you please tell us, in your financial accounts, and as far as the government securities are concerned, you have a higher forecast in terms of the inflow into the government securities. Does it mean that you expect additional 12 billion from non-residence investments into the overseas, and which part may go into the new Russian Eurobonds? And my second question, some analysts interpret your statement about the possibility of reducing further the keyrate at one of the next board meetings as just a single reduction. Can it be that it will take place twice within a year? we indeed sent out a signal that a transition to a neutral rate is possible until the middle of 2020, which means both possibly a one-off or 2 times key rate reduction if the situation unfolds according to our baseline scenario, if there aren't any negative surprises. Now, in as far as bringing resources into the government securities, we've got 15 billion as actual results, so we do allow for some possible inflow in the remaining months of this year, let's say about 3 billion. Dear colleagues, Tatiana. RBK. Traditionally, it is expected that the fiscal and the monetary policy does affect the level of supply and demand and may accelerate price growth. But the situation that we currently see, and we're judging by the second quarter, the price growth is at the lower level, because when everybody expected the key rate to go high, it was at about 2.5%, while consumer lending is growing above the expectations. So where from does this paradox come? Could you please be more specific in your question? I didn't really understand it quite well. So you're saying that inflation is growing lower than we expected. Yes, the inflation growth rate is lower. The annual inflation growth rate are below expectations by the central bank. I mean, when you were raising the rate, while the consumer lending growth rate is above expectations of the central bank. Doesn't this situation seem to you to be a paradox? Because it is assumed that the central bank, through its key rate activities, is either accelerating or decelerating inflation through demand. Well, the inflation is being affected by a quantity of factors. Without that, we do consider the effect upon inflation from such a factor as consumer demand. And it would seem that if consumer lending is growing, and consumer demand should also follow suit, and the inflationary pressure should also grow. We don't see that. The retail trade is growing very moderately at lower pace. And so based on this and other data, we conclude that the retail lending, consumer lending, in many ways allows one to support the level of consumption of the household without growing it, without strengthening the domestic consumer demand, but to sustain it at the level that it has been at approximately through the previous period of time. So we don't see this inflationary pressure. Retail consumer lending, first and foremost, is aimed at compensating for the lower real income. Dear colleagues, I'm sorry, as always, we have several questions coming from our colleagues from the regions. Tatiana Burova from Yekaterinburg, the Pensioner newspaper. Why, with the reduction of the Bank of Russia key rate, the banks lower their lending rates not significantly, while the deposit interest rate very considerably? Well, I believe it becomes more evident when there is a cycle of rate reductions taking place. But indeed, the banks, not immediately, and not unanimously, either raise or lower their deposit or lending rates. And by the way, whenever they alter their lending rates, they take into account not only the inflation in our key rate, but also the lender's risks, because those could strengthen or weaken the non-price lending terms and conditions. And our key rate is changed differently or is deferred into the deposit and lending rates at different speed. And so one should compare these with the previous period. For example, last year, we didn't even raise the key rate when the deposit rates started growing. In this way, the banks responded not to the changes of the key rate, but to the growing inflation and the inflationary risks. So this unevenness will remain, but overall, if we reduce the key rate, if inflation risks diminish, the banks carry forward with a certain lag, with a certain proportion to the deposit and lending rates. Thank you. Yes, over here, please. Good afternoon, Arseniy Molchanov, Russia 24. Our colleagues from Kommersant newspaper wrote an article that recently the lending activities have grown up amongst the 18-year-aged ones. So once they celebrate their 18th birthday, they get an offering credit card from a bank. But, we understand that they don't have any income, and it's going to be their parents who will have to bear the responsibility. We do believe, indeed, that the banks should pay more attention to the credit worthiness analysis of their borrowers whenever they give the consumer loans. And that is exactly the purpose that we introduced the keyrate indicator, which is the debt burden upon a single borrower. We have published our decision one of these days in order to discuss this topic with the banks. We have been discussing it with the banks for quite some time. The banks need to raise their awareness as to the yardstick that they should apply in order to assess the existing debt burden, which will be reflected upon various ratios. So this is the kind of a soft regulation that we're going to be introducing, but this must not be an individual regulation depending upon the age or any other characteristics. I mean, it's the debt burden per borrower that should be taken into account. Anastasia, please. You also mentioned about reaching the 7.5% of the GDP. Could you please tell us, because I think that you have already considered what will be the level of the liquid assets should be a safe one in order to start investing the sovereign wealth fund resources in order to avoid the weakening of the fiscal rule. And the second question is that currently we are having a discussion with the Union state, which is Belarus, to switch over to a single currency. So what kind of status this process is currently having, and what it could eventually come to, ruble or some new currency? And are there any plans to start this discussion with other Eurasian Economic Union countries? In as far as the 7% is concerned, we would need to yet again revisit this threshold, because this is the kind of an assessment that we ought to make, as well as have both the central bank and the government exchange their views, but principally so that you understand that it's not only about 7%, but generally about changing the mechanisms when effectively the oil and gas revenue starts to be spent. Because, let's say, if all of the income is spent which we earn when the oil price goes down, when the federal wealth fund is already have 7% accumulated in it, it means that we regain the dependence between the domestic indicators with the oil price fluctuation, because any increase in spending would mean changes in the real exchange rate. Vulnerability comes back. And in my mind, this is very much undesirable. Sometimes they're having a discussion and saying that we're not going to be spending everything above 7%, but let's say some percentage above 7%. Effectively, this would equal the cut-off price being higher. We stabilize the economy. It no longer so dependent upon the oil price fluctuation. The stabilizing effect remains in place, but the level of stabilization, let's say, not going to be 40 plus, but slightly higher. And that may lead to a one-off real exchange rate growing and certain reduction or the weakening of the competitiveness of the Russian companies. But this stabilizing effect, as a rule, will remain. So whenever various mechanisms of investments are being discussed, it is important to understand what it is we're talking about and where we are ready to change. Sometimes 7%. I mean, this kind of an exercise is where it is important to consider whether 7% is sufficient or not. The National Wealth Fund, having in mind the risks which are currently quite different, rather than 7% to be considered before the fiscal rule is introduced and before other foreign economic factors are in place, whether it's sufficient to have such an inclination. And the third thing, once the decision is made about how to invest, and the efficiency of such investments is determined. It is important for such investments to increase the potential economic growth. Then there's going to be less inflationary effect. Then we won't need to respond through our monetary and fiscal policies. Sometimes it is being said that one may give loans to the importers of our products in order for them to expand the external demand for our products. But from the point of view of macroeconomics, from the point of view of the currency inflow, it will be the same as spending this money domestically. So we believe that macroeconomically, in terms of the effect over the real and effective exchange rate, is going to be the same approximately. It is important to understand here whether such investments take place, what will be something which will generate the best effect upon the potential increase of the economic growth in the country. And as far as negotiations with Belarus are concerned, these are indeed underway, but in a very starting phase. Let me remind you that in our union agreement, we were talking about a possible transit to a single currency. But again, we are going through an initial phase of discussions. We're not talking about, disseminating it to other countries. Yes, colleagues, please. Zhenya? Bloomberg Agency, Evgenia Pismina, one more specific question about 7%. Just to mention that I am the government, and I have come to seek your counsel as to how high I should raise my threshold. Could you please advise me? By how much? 15%, 20%, or 50%? Well, I think that if the government is going to ask us for advice, we will do our calculations. We don't have any finite ones, so I'm not in a position to give you such an advice with full comfort. I'm simply calling upon you to pay attention that this particular figure has come to us from the previous set of regulations, so you must be adequately critical about it. So we will definitely be in a position to calculate what should have been a safe and comfortable level of the National Wealth Fund. And another quite general question. During the St. Petersburg Forum, you and Minister Oreshkin, you had a discussion about consumer lending. Oreshkin described consumer lending as a bubble, while you said that people, take loans not because of a happy life. Well, effectively, that was not really a discussion. You too simply stated the fact that people in this country live poorly. I mean, indeed, it's for several years in a row, individual income has been going down. The average consumer check has been going in decline. People are taking more loans. Inflation is high. Inflation is low while the oil price is high. You have underscored here at the same time that the financial environment is improving. I mean, the financial environment is improving while the people are getting poorer and poorer. So we are in a bit of a trap. So can you tell me how are we to get out of it? Well, at the very same St. Petersburg Forum, I really stated my position. In my mind, in terms of the restrictions to economic growth, you should look for those not in the financial area. Whenever we discuss these limitations, both for the economic growth, both the experts and the government members and the businesses do see that that brings about certain limitations to the economic growth. And we have taken a look. The availability of loans, depending upon any poll you do, is usually in the 6th or 7th place. It is not among the top 3 reasons that people quote. First of all, this is the certainty of economic growth, the investment environment, anything that stands behind the investment climate. So, in my mind, whenever we propose measures to improve economic growth, first and foremost, we should alleviate the kind of obstacles which the economic operators do identify as obstacles, as well as we identify as obstacles. So with this in mind, all the set of structural measures, the ones that improve the investment climate, this is the whole tool set which should result in the high economic growth rates. And the national projects are aimed at that. And I shall reiterate what I'm afraid of. The national projects, and we already see it based on the actual results this year, they are unfolding in time. These are complex projects. They are not simple. They require time. Time is necessary for them to be executed, as well as particularly get the results from them, because the results from the structural changes is deferred in time. So it would really be desirable for us to focus upon establishing the really necessary conditions for sustainable long-term growth. Because when such projects do not produce immediate results, there's always, a temptation either to increase investments or the fiscal rates, because that could bring in a short-term economic growth, speed up, but that won't lead to a greater economic potential nor to a greater economic growth. So that is our approach in defining the role of the fiscal policy. This is the topic that is quite debatable right now. We see our role in improving the economic growth, but that calls for a low, stable inflation, predictable rules of the game. And that is the kind of a contribution we make into making investing attractive. But that is not enough. Stability is not enough, neither for economic growth nor for the real income growth. But in as far as the consumer lending is concerned, once again, I shall repeat, there is no bubble there right now. We do not ascertain that based on any indicators, because that is something that the dynamics of the consumer trade turnover indicate. But the bubbles may appear. Consumer lending, mortgage lending, bubbles may get accumulated very quickly there. So we're undertaking macroprudential measures in order to avoid such bubbles in the future to emerge, which will create the risks to financial stability. We don't have that right now. And whatever we do, we're trying to avoid them emerging in the future. Thank you. And we've got another question from our regional correspondent, which is somewhat similar to the previous question. It is Alois Kriper from 74 Chelyabinsk Information Agency. What kind of inflation do you believe will be conducive to economic growth, and even better than that, to the economic leap in this country? The stable economic growth with good rates of economic growth, because these are the ones which are not extremely high, will be attributed to the low and stable inflation. We really think this is important because it is a low and stable inflation which will make lending to businesses easier. People won't have any concern that the incomes that they earn will be devalued by inflation. All of this put together will extend the planning horizon. This will all work for the benefit of the economic growth. The high inflation, above 4%, it is quite unstable. The highs in the inflation, usually it is less stable then. Amongst many countries, the target inflation level is even lower than in our case, not 4%, but 2% amongst the mature economies. We did some estimates and we came to the conclusion that the 4% inflation for our economy is the correct one, because there's a structural mechanisms that really start working to create stability, and so price conditions amongst such factors become stable and work towards a better economic growth. Yes, colleagues, please, Margarita. Thank you. The banking market players note that in the consumer lending area, against the various central bank measures, the maturity of various credits gets extended. Yes, we have also received this information, i.e. that some of the banks are bypassing our regulation and trying to extend the terms of really short consumer loans. We are discussing this and we are trying to decide what our measures should be in order to make sure that such loopholes are no longer there. Katya, please. Yes, thank you very much. Ekaterina Golubkova, Reuters. I wanted to ask you to be more specific about the National Wealth Fund. Could you please tell me, have you already had a discussion with your colleagues in the Financial Ministry? What's the position of Ministry of Finance about your ideas, and whether the Trade Venbe, this particular issue has been raised to the level of the President? No, it's just a beginning phase of our discussions, because based on the government estimates, we're going to achieve the threshold of 7% of the liquid part of it next year. And therefore, I believe it would be correct to begin this discussion now. The Minister of Finance is aware of our cautious approach to changing the rules, because we believe, and I'm sure that the fiscal rule has played a very positive stabilizing role for both the financial system and the economics generally. But of course, we need investments. We need investments into the infrastructure. And I think that the big challenge here is also to develop very effective implementation of the projects for which resources have already been allocated, and based on that, make our decisions. But this discussion is at its very beginning stage, just to put it in a nutshell. Yes, Elena, please go ahead. Elena Fabricna, Reuters. The rally in the OZ market continues also after your signal. So what do you think? Is there any risk of this market getting overheated? We do not identify such risks, although we do see that the yields have gone down. And this is indeed the expectations about the trajectory of our fiscal policy, as well as the dynamics of the fiscal policy by the leading central banks. We do not identify any risks to ourselves. And amongst other things, if you consider the growing share of non-residents, it has grown up, but hasn't reached maximum. The maximum level was 34%. Right now, it's a little bit above 29. Now, the reason as to why we don't see this risk, because principally speaking, we've got a very low government debt, sovereign debt, and this is one of the main drivers which stabilizes the overall financial system. The level of the sovereign debt is very much under control. Thank you. Yes, Elena, please. Elena Petiashova, TASS agency. Elvira Nabiullina, we are looking forward to see the individual pension capital draft law. Do you know when it is going to be released and when the whole system is going to be launched? And the mechanisms of connecting the citizens to this particular system, how does it look in its final draft? Yes, we would also very much like for the individual pension capital to really come along as soon as possible. I shall repeat again. The cumulative pensions we see as an absolutely necessary element to have a decent pension for the Russian pensions in the future. And it is going to be a long resource for the economics and a very good stabilizer for the financial system, because these are institutional investors, the Russian-owned domestic economic investors, but we don't have the right of the legal initiative. It is dependent upon the government when this whole discussion is going to take off. We are ready to participate. It is difficult for me to say what is going to be the timeline, when it's going to be made public, when the discussion is going to be completed. But overall, we believe that this will come. Indeed, one of the questions which is being discussed, the level of voluntarily, so to say, the automatic way of getting connected, because we originally, act upon the premise that every individual, every citizen must make up his or her mind as to whether to be part of it or not. And so we hope that that will happen in some near future. Dear colleagues, our time is gradually coming up. Please, the last question from Anastasia. Recently, a discussion was launched to limit the period of time within which the central bank should own the insolvent banks. The Minister of Finance believes that this particular period of time should be shortened. On many occasions, you stated that in between your different divisions and the oversight functions, there is a cement wall, but maybe one should cast a broader look. Maybe the time has come for you to exit the financial, the equity of major financial institutions such as Bear Bank. Well, as far as the banks who are going through the insolvency procedure are concerned, we are preparing them for a divestiture. The smaller banks we already put out on sale, and this will be taking place after the changes in the legislation, after we review the annual reports. As far as the Discovery Bank or Keyrate Bank is concerned, we're preparing it to be sold in 2021. Now, legal restrictions, I would say, are superfluous and even detrimental, because if we are to set the legal restrictions on ownership by not only the banks, by any non-strategic assets, because we've got quite a big share of the government ownership, not only in the banking sector, just to remind you, but in as far as setting these dates in the law are concerned, I believe this is detrimental, because investors may expect that despite the environmental conditions in the economy, an owner will be selling an asset. And that of course, may lead to a downward price pressure will grow, and we will have to pay a large discount because divestiture and sale depends upon the market environment. At the same time, we understand that one may always make a reference to the market environment, saying that it's not really favorable and we are not really willing to wait for a brilliant environment. But if we can see that this is a big one-off depression in the environment, not a single sensible owner will start selling an asset within this period of time. So there has to be a bit of flexibility. And in as far as the cement wall is concerned, it is true that we've got a lot of functions which potentially do have a conflict of interest. We are a mega regulator. We are very well aware of it. So we are trying to develop various restrictive walls and checks and balances between different functions. For example, on the board of directors of the companies in the financial institutions that we own, we don't have the representatives of the supervisory functions. In the, let's say, fiscal policy activities, we do not take into account the supervisory information, the oversight information. The testimony to it is that exactly like the Bank of Russia, we, as the Central Bank of Russia, lost money in the banks from whom licenses have been revoked. So we have this cement wall, and we will pursue with such a policy. We understand very well that here we ought to regulate the conflict of interest so that also the market would have a stronger trust towards the policy that we pursue, towards the oversight policy. This is a very important thing that we continuously monitor in everything we do. That's it. Thank you. Yes, dear colleagues, thank you very much. Thank you. Thank you for your interest and for your interesting questions.